Hi everybody and welcome to this week's Dollar Index Market Update. You're speaking with Nick McDonald of Trade with Precision. On the screen here we have the Dollar Index, which is the topic for today. We will in a minute go and have a look at some of the spot currencies, some of the major currencies that have the major weightings in the Dollar Index. Then we'll come back and relate those thoughts to the Dollar Index chart itself. Just to firstly just have a very brief look at the dollar index, what we have on the daily chart is a market that was downtrending so strongly and nice and smooth and consistent. And notice that when we're doing that we have nice small bars as well as fanning moving averages. See how the 10, 20, 50, 200 period moving averages are fanning downwards, and we have nice steady consistent candles. What we've got into it is now is a period of ranging or consolidation where the candles get much bigger, it gets much more volatile. See how the moving averages are starting to cross over a little bit with the 10 and the 20 coming together and going a little bit flat. So this is now a ranging market, and now the question has to become, will we move down out of this and continue back in the downtrend, or will we move up out of here? And actually there's an argument, there's a case for both sides, but my preference at the moment is bearish, and I think that we'll come down towards the 7,500 level and test it down here. Let's just go and have a look at the spot currencies, and I'll show you some of the reasons why I'm thinking the dollar looks bearish across those, and then we'll come back and tie it together on the dollar index. So first let's have a look at euro dollar. Now in euro dollar here, this has so obviously been opposite. This is the euro strength versus dollar weakness, and similar thing, we had this really strong uptrend. We had the moving averages fanning out. We had reasonably small candles, except for the green ones, which were very big on the way up. But now we've got into this period of ranging and consolidation and volatility. In fact, what we had up here, if we just draw a line in, at this 1.4 level, it's a big number, and let's just draw that in on the weekly chart here as well. This is a big level where price has tested on multiple occasions in the past, and it's found support and resistance at this area in the past. So moving up to that level, it's always interesting to see what happens there. And certainly what's happened over this last 4 weeks, in fact, we've broken above 1.4 in euro dollar and failed. We've broken above, failed, broken above, failed, broken above, and failed. Now that might sound a little bit bearish to you, but also let's just have a look at these last 3 candles here in detail. They've come right down and right back up again. The sellers have pushed the price right down and completely rejected it, brought it back to 1.4. Pushed it right down in the early part of the week and right back up again, completely rejecting the lows and pushing it up and holding it around that 1.4 level. This is a really bullish sign. These 3 candles are showing that buyers are still very much in control of this market. We're alleviating a little bit of the buying pressure, so they're perhaps not as much in control as they were where we had these 4 up weeks, just big green up bars straight up in a row. But the thing when we look at these candles is we're saying who is winning the battle, the buyers or the sellers. And there's absolutely no doubt about it that here on euro dollar, the buyers are still winning the battle. Therefore, we're still seeing signs of dollar weakness. What we need to see here, of course, is a good close, and preferably a weekly close up above 1.4. Even on the daily chart, we'd like to just see a push up and a close up through a little bit higher than 1.4, but just to be breaking up through here and closing higher than it has closed in this recent move. That'll be a good sign of a push out of that range for euro dollar. Let's have a look at dollar yen. And dollar yen has already pushed off to new lows, so we were in this good strong downtrend. We had a good pullback into the moving averages here, into the 20 period moving average. A little bit of a bigger pullback than we've been having within that early part of the downward trend, and now we're back down, we're breaking to new lows and just continuing to look bearish. Coming and looking at higher time frames on here, daily, weekly, monthly charts. There's nothing much to say now that we won't keep on going lower. We had a one touch back here all the way back in 1995. We've been down at this level. And we're now breaking down through there, and we've closed down below there, and at the moment it looks like continuing. Now it's a little bit overextended, this move, so whenever moves move for a long time, we know that they have to change direction at some stage, and the thing is to try and pinpoint where that might happen. For now, as much as I'm seeing that this is oversold and at some stage will pull back, I'm not seeing any immediate signs of a pullback. So I'll be watching for when I think that might pull back, and certainly on daily and weekly charts it's just not showing any signs right now. Other than that, it's due one, and we'll have one at some stage. We'll keep an eye out for technical reversal signs. So have a look at cable. Now what's interesting about cable is, let's start with this weekly chart. Very similar to euro dollar having that 1.4 level. Cable had 1.6, And here you'll see that there'd been multiple tests at 1.6, and multiple times we'd bounced off it, we'd been supported there, we'd also been resisted there. We'd come up, and similarly we'd had these last three candles where we'd been testing and still failing to get a close above 1.6. What is interesting now though, let's just zoom right in and look at this line. We've now managed to really break up and get a good strong close above that 1.6 level. We've closed at 160.37. Now that looks bullish, and this is a market which is continuing to make higher highs. See here, we've made higher highs than previous highs. We've now pushed up and made higher lows, so we're continuing to make higher lows here. This is the market looking very, very bullish, and something which makes up a reasonable weighting in the dollar index, and also very closely correlated to the euro dollar. And euro dollar, we're looking for that close above 1.4. Bit of a heads up when cable has already had that break up through there. Let's have a look at dollar Swiss as the last one before we come back and look at the dollar index. Okay, so here on dollar Swiss, now dollar index, we're going to look at this 78 level shortly, and on dollar Swiss we had a similar level back here at 97. Now if we just come down to lower time frames and see where I've marked in this 97 level, all it was a point of major support and resistance, where there'd been major support in the past, major resistance. See how a few times we broke up through it and we rejected it very quickly. We broke up through here and we rejected it. We broke up through 97 here and we rejected it. But then we managed to break up through and come back, and this time, rather than rejecting it, we really found strong support there and failed to break back down below 97. Then we had a good run. This was a 200-point run up to 9900. So that was a good run there on the dollar Swiss, and it showed some real dollar strength. What's a concern now though, what's starting to look bearish, is one, it's now put in a lower high, and if we can break back down, probably the key level here now is this 98 area, because if we can break back down through here, that's the exact point where we've made a lower low. Therefore, that's the exact point where the short-term uptrend on a 4-hour chart has turned back into a downtrend. So the exact point where the dollar versus the Swiss franc will look bearish again. Also, if we just jump up to higher time frames and have a look at the weekly chart here, I'm always looking for these pullbacks into the averages, and we've had that. Unlike on other pairs, we've had this good run down, really good pullback. See how it's come right into that 10-period moving average, and it's already starting to show signs of rejecting that. Starting to show some bearish signs. Coming to the daily chart, we've pulled up to the 50-period moving average. We've got red candles. If we can break down through here, through 98 level, we will be showing signs of continuing back into that longer-term downtrend. Let's come and tie this together onto the dollar index. Effectively, all of those major pairs I just looked at were showing dollar weakness. And now we'll look at the dollar index and see how this fits together. Now, remember I said the 9700 level on dollar Swiss was key. Let's have a look at how 78 was key on the dollar index. Let's come and just look at this even here on a 4-hour chart, and you'll see a similar thing where there's multiple touches, multiple tests. Here we broke up through and we rejected it. We broke up through again, and while we held it temporarily, we rejected. Then we came up and we just kept on finding resistance there. We broke up through again and we rejected it. So see the difference where dollar Swiss broke up through at one stage and then came back and found support before continuing, whereas the dollar index at a similar level, its main level just kept on breaking, rejecting, breaking, rejecting, breaking, rejecting, and see how it even continued to find resistance at that exact point, being a really key level on the chart. Well, now we are moving back towards a bearish trend. Let's just have a little look at why and how this is happening. Coming back to the higher time frames. Here on the daily chart, we've gone into that range, very much like we have on euro dollar and cable, where we've come down. We're at a major area around 77 to 7800. And we've now got a bit volatile, we've got a bit rangy. Note actually this big candle here, I've actually marked in what I consider the real low for the day. So 77.24. There was a few trades that took place right on the close on this, the end of this particular day, which caused a bit of a spike down. But actually when you look at it and look at where the volume was, I've chosen to mark 77.24 as the low for that day, just to kind of take out that low from my equations for my technical analysis. So now what we have, trying to ignore that, is we have put in, on this particular chart here, a lower high. We put in the lower high and we're forming some support down around 7700. Let's just have a quick look at the weekly and monthly before going down to lower time frames. Having a look at the weekly chart, you'll see 7800 being rejected. We've broken up through it on the weekly, failed, broken up through it and failed. This is showing bearish signs. We just can't hold above 7800. Coming to the monthly chart, you'll see that we've got support down at 75. It looked a little bit like we've bounced off support, but actually we came to about 75.80, so we came only with, we're 80 points away from it still. We had a little bit of a rally, but now my view is that we are, because we're looking bearish on the dollar across many of the pairs, Coming down, I'm looking at this to come down and test 7,500. Now let's just have a look at what has to happen if we come down to even here on an 8-hour chart. The key area that we really need to see broken now is actually just virtually we're really there. See how we've been down around 7,700 now many times. We've come down, bounced, we've come down here, bounced, we've bounced again. Even on this particular day here, remember this was only a few trades took place down here. The real low was about 77.24, and when I say the real low, well, there was trades down here, so that was the real low, but there was such low volume there that I'm choosing to look at the liquidity for the day and where it was for kind of 24 hours and well, for most of the day, apart from about 5 minutes, and it was up around here. So really, what we've got at 7,700 is lots and lots of tests. See here, we came down here and we just dipped below 7,700 and we've broken back up through it. Well, now I want to see a breakdown below 7,700. Any break below these lows that were formed on Friday last week, so the actual low there was 76.90, literally 1 pip below there, 1 cent, 1 tick. If we can get just down to 76.89, I will be considering that bearish and looking for the run down towards 7,500. Now, what can change my mind here, because obviously things can change quite quickly. If we look here at the daily chart, how we have broken up above 78 and rejected immediately the next day. See how there's 2 occasions where we've broken above the 78 level. We've broken up and we rejected immediately with a close below 78 the next day. We broke up again and rejected immediately with a close below 78 the next day. Notice also that these closes up here are around about 78.50. So where it did get to is about 78.50. So really what I need to see is one of 2 things. Either I need to see a close above 78.50 or I need to see 2 closes above 7,800, 2 daily closes. So if we can get that, then I'll certainly change my stance and I'll be saying that this looks like maybe, based on the weekly chart, it's due a pullback back up to around about this 80 area, back up into the 10-period moving average. However, if we break down below 7,700 at all, not even looking for a close, I'll be looking for this to continue back down towards that 75 level and test support there and probably get a bounce off that level. Happy trading all, I hope that helps and have a wonderful week.